Remember when former AirAsia CEO said this, and just today, MACC said this? I reckon what Irene was referring to when she said there's no financial fraud in the way the investments are being made and used. But then later, MACC dropped the bomb, saying that we are investigating on how some of the 47 million investment from PNB and Khazanah might be misused. Cause people be like, I cannot brain this lah. Why would you even invest into an unprofitable startup in the first place? Now, before I explain further and for the sake of discussion, bear in mind that Grab was still a loss-making company when it was publicly listed in 2021. Only in Q4 2023, it made its first profitable quarter. So what you need to understand is for any venture capital or private equity investments, profits are not made hinging on the company being profitable. Instead, it is based on the company valuation. A startup valuation goes up by raising more funds, more money with the hope of future prospect. And this inevitably makes startup notoriously difficult to value accurately, especially the unprofitable ones. Now the thing about valuation is, it's all about stories. Every startup founders or management convey their company's story to the investment community. Some will buy the story like PNB and Khazanah in this case, or Fashion Valet, and some do not. The investor who buy into the story defines the value of a company. So all you need is a reasonable basis for the founder, to back up your revenue or profit projections. Just like Fashion Valet back in the days. Now this article on the Edge is in 2017 series. These are all, projections or whatnot. And that is what any startup founders tries to do, continue to tell more or hopefully better stories, of course backed by numbers to raise more money. Although having no profit does not necessarily mean that they don't make money. Many startups do have revenue coming in, but they intentionally invest most of it back into the business to grow quickly. And revenue alone is not enough to grow the business fast. So they pitch to more and often bigger investors to invest more money to accelerate that growth. They try to outspend their competitors, growing market share. And this is the idea of winners takes all. Achieving profitability is only something to consider or to do later. You first grow, you take all the money that you have and you invest it to scale, hoping to make it big enough, right? Or capture big enough of the total addressable market. It's a very long-term strategy. Again, Grab follow this playbook to the T. I give you a layman example. If you invest 100,000 into a company while it was valued at 1 million for a 10% stake, 5 years later, the company is valued, say, at 20 million. Your 10% stake right now is worth 2 million on paper. When you do eventually cash out, that is like 20 times return realized. On the flip side, if you invested 1 million into a company valued at 10 million, again for a 10% ownership or stake, then your valuation of the company drops to 5 million, your 10% stake right now is only worth 500,000. It's down 50% on paper. And you would realize this loss if you cash out. For Fashion Valet case, you can read this 2017 article again by The Edge, right? Before those two GLIC invested, right? Where the founder actually said, our goal is to try to be like the LVMH of Southeast Asia. That is a good story, yes. I am not saying that this path or method of running a business is financially prudent or even sustainable. And you might disagree with this explanation or with this, but I'm just explaining how reality works. To be fair, for Khazanah and PNB, Malaysians might have been too focused on this small little red dot on the big whiteboard because Khazanah National did strike gold with Farm Fresh, the well-known local milk brand, 20 million seed capital reportedly invested back in 2011 for a 30% stake. And 11 years after that, Farm Fresh went IPO and Khazanah stake, this 30% stake reportedly is worth about 1.1 billion at IPO time, right? Now this is a homegrown success story and it yielded a whopping 54% return, showing that venture capital and private equity investment do bring monumental returns. Follow for more investment analysis copy talk like this.